Hi everyone, it's Alex Sparks here from Sparks Finance and I'm your local mortgage broker in Bathurst. Today's video is the do's and don'ts of refinancing. So the first one here is do consider a shorter loan term. Now a lot of people will look to refinance after they've had their mortgage for 2, 5, 10 years, whatever it might be. So if you come and sort of say, yep, great, I've paid off 5 years of my loan, I want to refinance. Now mistakenly, some people just go, okay, great, I'm just going to put that back out to 30 years and have a 30-year loan term. Now if you had a $500,000 loan at 5%, by stretching that back out from 25 years to 30 years, you're going to pay an extra $89,000 worth of interest over the life of the loan. So it's so important that if you do look to do that, you just make those repayments as if you were paying it off in 25 years. So keep the same repayments as were before, and then you're going to save a considerable amount of money. So just understand that going that shorter loan term is going to save you a considerable amount of interest in the long run. The next thing here is do look at the long-term benefit. We want to look at, a lot of banks are offering cashbacks, which are awesome at the moment. It's really a great offer. If you're going to go with that bank for the right reasons. Looking and saying, great, if I switch, I'm going to make, I'm going to save $100,000 over the life of the loan by refinancing to a lower rate. But a lot of people just might say, great, well that bank's offering $3,000. I'm just going to go to them and get $3,000. But the life of the loan, that may work out to be more expensive than another option that didn't have a cashback. So it's so important to look at the total cost of the loan and what is the actual benefit of you refinancing. Another one is fees. A lot of people go, great, I'm going to go and do these package fees with offset accounts, but not set them up correctly. And therefore you're probably going to pay over $20,000 extra in fees than if you just went with a basic variable loan. So it's really important to look at the total cost benefit over the entire life of the loan to see whether you're going to be better off or not. The next thing to do is to clean up your finances before refinancing. So it's just like if you went for a loan with a purchase, the bank will look at everything, account conduct, they'll look at your accounts and your borrowing capacity and serviceability and all that kind of stuff. So if there is anything you need cleaning up, it's really important to do that beforehand. Speaking with the mortgage broker before you're looking at refinance is really important because they can have a look at everything and sort of say, great, well, we can look to refinance. We just want to do this, this, and this first to make it really attractive for that bank when they pick up your application. They can assess that and go, great, we'd love to have them as a customer. So cleaning up your finances is really important. The next thing to do is to consolidate the right way. Now, a lot of people at the moment are looking to consolidate car loans, personal loans, credit cards, all that kind of stuff to try to reduce their expenses. But it's really important to do that the right way. A lot of people say, for example, you had a $50,000 worth of consumer debt that you wanted to consolidate in your home loan to have one repayment. The total cost of that $50,000 in interest over that 5-year period at say 10% interest on average would be $13,741. Now, if you didn't consolidate the right way and you just put that on your home loan over 30 years, that $13,741 in interest would blow out to $46,628. Consolidating the right way is so important. The right way to do it in this instance would be to take that $50,000, put it on the home loan, but make extra repayments as if you're paying that off over 5 years, and therefore you're only going to have a charge of $6,614. So it's not financial suicide because you're not putting those consumer debts back over 30 years and paying a considerable amount more, over 40 grand more, by not doing it correctly. So really important to make sure that you speak to someone so they can guide you through that process to make sure you're making the right financial moves. So other thing to look at too is don't forget your long-term goals. People often sort of go, great, I just want to get a lower rate. Okay, well, just understand that what we do now is going to impact us in the future. If you want to look at buying an investment property in a couple of years, putting that loan over 30 years, what can we do now to increase your borrowing capacity? So when you want to go for that access equity to get your investment property, then we're in a good position to do that. If you're looking at selling down, you're possibly looking at moving town or changing job or doing whatever that might be, and you might sell the property or upgrade. If that's in your radar for the next couple of years, you don't want to necessarily look at a fixed rate loan. So it's so important to identify what your long-term goals are as well, to make sure that this short-term moves that you're doing are going to facilitate that and do the best thing for you. The last thing we've got here is do seek expert advice. There are a lot of comparison websites you can just go, great, well that's a low rate. But once again, if you look at all the things that we've listed within this video, it's a lot more complex than that. And to have someone there guiding through and asking questions about, your current situation, what your needs and goals are, is going to put you in a so much better position to be able to gain a loan that's, one, the best thing to do financially for you, but obviously two, to set you up for the future. Seeking expert advice is the main thing you want to look to refinance, but also two, it doesn't stop there. We'll continue to guide you through, even after you've got the loan with us, we'll continue to help you achieve those goals that you have in the future years, and make sure that, someone else is looking out for that loan to make sure you've got the best loan in the market for what you're trying to achieve. They're just a few do's and don'ts of refinancing. But as I said, seeking expert advice is the most important thing. So if you guys want a hand at looking through your finances and trying to seek a better interest rate or a better loan product for you, please don't hesitate to give us a call. We're more than happy to walk you through that and see what opportunities are out there for you. Thank you.